think the Fed know what's really going on, because he's asked about the banking crisis. He's now like, yeah, well, we did consider pausing. So he's like considering pausing, hiking 25 and hiking further. Basically, just watch the KRE, the regional banks, because that's going to give you the signal. I just put that on Twitter.
Thank you.
All that matters.
I had this debate with OSF today. I was like, everyone keeps saying it's the biggest FOMC of the last 10 years. I'm like, it doesn't matter. like they what they say doesn't matter today. What matters is really what happens with the banks. Like they're going to be pushed into a corner. If you listen to what the FMC said last month, you'd had no idea the policies that they ended up enacting.
And if you remember, we had the same problem around COVID.
Yes.
Is what happens is all economic data that fell before this is now irrelevant, because we don't know the effects that this has had.
Yeah.
We do know that this is essentially a net tightening that's happened to the system. He's even mentioned in his presentation, this could be 100 basis points of tightening. And it's not over yet. And so we don't know what the outcome is. Andy also admitted that the probability of money printer going burr goes up. It's really that simple. And everything else is irrelevant. We know there's a recession. The markets have known this. I mean, I've tweeted out the chart many times. The year-on-year rate of change of the NASDAQ priced ISM at 35. What more do you want? But it's a forward-looking asset because it's technology, and therefore it's already pricing the liquidity cycle. The Chinese started it with their M2 growth and then their credit cycle, and now the US is in, and the Europeans will be in soon enough, and the UK had a stab at it as well.
Yeah, not to mention that we're still, I mean, if you look at ETH, for example, it's still 60 to 65% off the highs that we saw last year. I know that's obviously in 2021. I know that's obviously a very different environment, but it shows you like the potential upside in some of these things, I think, from a technological standpoint. And a lot of things have changed since then. If you look at Ethereum, like you've had the merge, like you look at how much supply is being burnt since they've had the merge, and you have all these various upgrades that are coming as well. And I know people have conflicting views on that, but like ETH's at a level where it was 4 or 5 years ago, and think about how much
kind of terminal levels for government debt to GDP on a range of different developed economies. And does that mean that we're end up like, do they have the capacity to add this much debt? Do they have the capacity to increase the Fed balance sheet or central bank balance sheet to the same extent? And this is kind of the route which Balaji is kind of going down over the last week or so, which is this is more than just money printer goes burr. This like money printer is kind of broken to the extent that it's, this all feels kind of Ponzi-like. And that can really shake the confidence, I think, in like global capitalism, let's put it that way. And some of the foundations that it's built upon. Are you going down that route? Do you see this?
No.
As no.
I think it's an ongoing path, but there's no instant thing. Because firstly, money printing lowers the value of the denominator, that raises the value of the collateral optically. So people can't go bust when you print. Right? It's a really key thing that people don't realize. Secondly, I've done a lot of work on this. I wrote an article called The Truth and the Trap, where I calculated that the amount of government debt growth. Let's start at the beginning. The government and all of the central banks are doing the same thing, and it's like a giant agreement that they've never told anybody about. And I'm just doing a lot of work on this now. So I don't think that...
You don't think the chickens are ever going to come home to roost on that game, basically?
No. And what I think is GDP growth, which is the issue here, which is the real issue. GDP growth is made up of population growth, productivity growth, and debt growth. The debt growth, the rate of change has stopped because it's basically just interest payments. As long as you don't let your interest rates rise to 5%, you keep them about that GDP level, you can get through. Population growth, well, we know that's now dyed in the wool all the way down forever. So you've got productivity. So productivity has to change, and productivity is technology, essentially. And the core component of productivity, so technology just increases the amount of output per unit of energy. But what we're going to do within this, and Europe's forcing the way, is we're going to lower the cost of energy and decouple it from the fossil fuel market, which on an inflation-adjusted basis has been about the same price for the last 60 years. Solar, geothermic, everything, including nuclear, will drive the cost of electricity well below the anchor rate of fossil fuels. That is the complete step change for the world. We don't really know how it plays out, but fragmentation seems to be the answer. But the US holds the one weapon, which is the dollar. 87% of every single trade transaction on earth is in that one currency. And they will use it to their advantage. As we saw with Russia, they just cancelled their reserves. You know, it's staggering how powerful the US is. So that change to a multipolar currency world will take time. It just simply can't happen because the world is 400% of GDP in debt, 400 and something percent, of which at least 50% of it, maybe 70% is in US dollars. So if anybody tries to move away from the dollar policy, they've got no dollars to pay their debts, in which case everybody goes bust. So all of these things have to be done slowly. We have to split the world apart slowly. We have to get rid of this debt situation slowly, because if you don't, all outcomes lead to complete societal global collapse, which nobody actually wants, apart from maybe Balaji.
What is your view on crypto in that world then?
Crypto in that world, as I've always said, I mean, I got into this 2013 for exactly this issue. I lived through the European banking crisis. Our local bank in the village went bust and took people's money because they converted deposits into preference shares and then defaulted on the whole fucking thing.
Which bank was that?
I can't even remember which one it was. One of the bloody regional banks in Valencia. But they were terrible. I mean, the Spanish banks, that is the group of countries that enabled the Eurodollar market and the FX markets. They're all there, and the derivative markets. And the UK plays very well with that group of people. And the Cayman Islands is the other one because of how the offshore funding markets work. So they're all there. So my guess is if the US screws it up, the UK will eat its lunch. And my guess is they've seen that opportunity and they know the rule book because there is demand. And we'll see Coinbase moving. We'll see Circle, I think, are moving to Paris. We will see this endlessly because it's exactly why the big banks in the US ended up in London.
Yeah.
I never knew that Circle moved to Paris. That's
what it seemed to be, the announcement. Couldn't tell, but I'm sure London's going to fight for a lot of this stuff.
I think so. I mean, you had that big announcement roughly a year ago when Rishi was still chancellor and was like, hey, we're going to make the UK the global crypto hub. And I don't know necessarily what that exactly meant. And you have the CBDC.
Well, there was a press release more recently about it, so they're still on it. I don't know whether it's out of government and into civil service, in which case it will carry on if we change government in the UK, or if not, it gets thrown out. Don't know yet, but my guess is there's a lot of lobbying to make this happen.
Yeah, definitely.